Hello, welcome to another live broadcast of Master Investors Company. Welcome to the channel. Make sure you hit the subscribe button. And by the end of this valuable video, I would like you to understand what is the foundation of wealth, right? And the whole purpose of this video is that you understand what it takes to build true wealth. And in fact, wealth is measured in time, not necessarily in dollars. It's like, for example, how much time do we have if we stop doing any sort of work? How long can we live, right? And the amount of time that we can thrive, not just survive, thrive and increase our living standard every month, because we are ambitious people that like to do different things and we like to experience more things as we grow older. So we need the instrument of money and we need freedom in order to be able to do that. So how much time do we have if we stop doing our work or anything that you do to make any type of income, right? And if the answer is 1 month, 3 months, then we need to understand the true definition of wealth and how we can actually build wealth, because it's going to provide us total freedom and it's going to give us passive income, which will allow us to manifest our dreams and the things that we want to do on demand. So the topic, you can find the link of our latest vlog in the description here below. So make sure you go to our blog, to our website, and read the whole blog. We're just going to go over real quickly so you get the point, right? So what is the foundation of wealth? The financial statement is at the bottom and is the basis of all true wealth. Is the ability to understand and read financial statements, starting with our own. So the key to financial success is understanding our personal financial statement. And even if we have an asset or we do not have any assets on our asset column, it doesn't matter which class you are in today, whether you're in the poor, middle, or the ultra rich class, we all have a financial statement. That's a beautiful thing about building wealth, is that we can all start from the place that we are on today. We don't need anything to add on to start building wealth. What we need is true financial education and the ability to put together our financial statement, look over it every single week, every single day, if you will, and so that we can better our spending habits, so that we can understand where the cash flow or our income is going to, what are expenses, right? And what are liabilities and assets. And oftentimes, about 90% of people that I take a look at their financial statement, and just by listening to their vocabulary, I know that they have no assets on the asset column, and what they're missing is this right here, financial education. So I'm going to show you on a diagram what a financial statement looks like, and you can also download a copy that is editable on Excel, and you can fill in all the blanks. I'm going to show it to you in a minute. You can find it on our blog right here. If you scroll down, it's going to be here, down low here, and it's going to take you to a financial statement that you can get your hands on, and you can plug all your numbers in and find out exactly how and where you can improve your financial statement by either acquiring more passive income. You can determine whether the only type of income that you have is earned income. Remember, I told you there are 3 types of income that exist, which is earned income. You see it right here. Passive income and portfolio income. Passive income is what we focus here at Master Investor, and that's what we encourage all of our partners to start building and increase, because it's going to give us total freedom and it's going to give us true wealth, okay? We're going to pay the least amount of taxes when we build passive income, because the laws and the tax code allows us to actually pay zero in taxes legally. So in other words, if we use financial education, we have an unfair advantage among 90% of population in the world, because the only type of income that 90% of people work for is earned income. And that type of income takes our number one asset that we all have away. And that is time, right? Time is the most precious asset you and I have, because we can't really get it back. Once it's gone, is no longer in our possession that same amount of time. So, you know, we need to learn how to invest our time properly and be able to also take control over our time. When we work for earned income, when we have a job, then we lose control over our time. We have to clock in 8 hours and so forth. And so we don't have control over our time. And so if you like to do what you are doing at work, then by all means, it should feel like work. So you should continue doing that. But I also encourage you to start building passive income. Portfolio income comes from the paper assets like stocks, mutual funds, 401k, right? Those types of investment vehicles that I really call them fake assets, because remember, our definition here at Master Investor of an asset is very simple. We tend to take things that are complex and we make them simple, right? And so an asset puts money on our pocket whenever we're not working. Daily, weekly, monthly. We don't have to be present to earn that passive income. That's an asset. It produces passive income, and it does it in any type of economy. A sound asset, a true asset, will always make money regardless of what the market is doing, okay? And we have control over the asset, right? And so portfolio income is like giving the money away that you have worked for through earned income, and you expecting the market to go up in value, right? And then sell that investment, which is not really an investment. You're trading and hoping that the market will go up so that you can sell that at a higher price, and that gets taxed also at a higher bracket than the passive income. That's why we focus on passive income, because passive income is the holy grail, is what we, the ultra rich, work for, to build and acquire passive income. Remember, our rule number one in our community here at Master Investor is that we work to acquire and build passive income. We don't work for earned income. We don't work necessarily for portfolio income. We focus on passive income, okay? And so you can have this financial statement that we created for you. I believe this is the most important thing that you can get your hands on, because a lot of you do not have this down, okay? You need to know exactly on paper what it looks like, what is your income coming from, and also where is it going, because you need to have a plan for that type or any type of income that you're receiving in order to keep control and bring it back into your income column in the form of passive income. So you need to put your money to work rather than you working hard for money, right? And so I'm going to show you exactly what I mean when I say what is the foundation of wealth. And our short answer is learning how to read our own financial statement. And once we do that, then we can also read any type of business financial statement, because it's the same way that it reads. You can master your own financial statement, work on it to improve it, and then when you are going to invest on a business or an investment, you're going to ask for a financial statement, and you're going to read that business financial statement so that you understand beyond the point of advertisement that the seller is giving to you. You're going to understand the true story of his finance, whether that investment is a sound asset. It's going to make you money. How long has it been making money in the past 10 years, etc. It's going to give you something that most people cannot see. It's going to tell you the real story behind the business or the investment, and it's going to also give you the opportunity to make a sound decision whether you can improve that financial statement, and you can find ways that you can better the management and you can improve it so that the cash flow, if it's already making money, will increase even more. And usually what we teach here at Master Investor all the time is that, hey, focus on assets that can scale at any time. There's no roof, there's no cap to them. You can always improve it and bring in more cash flow. It's all about the bottom line, right? So let's take a look at what we talk about here on our blog. Financial literacy begins by understanding our financial statement. The reality is that money doesn't make us rich, and that's why I say we need financial education, financial literacy as a foundation to build wealth, because it's going to give us the knowledge. And one of the rules of Master Investor, of the 10 new rules, you can also get our latest ebook, one of our latest ebook right here at Master Investor. I'm going to leave the link below so you can get this, the 10 new rules of money and what you need to know in order to start building passive income. You need to get these 10 rules down, because a lot of people are still living with the old rules. These are the new rules of money that will help you increase your financial IQ, and therefore you're going to approach money and investing with a different mindset, right? So money alone does not make us rich. That's why a lot of people that have high-paying jobs, they earn high income, but they're not rich. They don't have the free time to do whatever they want, and oftentimes they give their money away to salespeople to invest it for them in the stock market, and they don't even know what's going on with their own money. They have no control. So they're not wealthy by any means. They might have a lot of money, but they're not rich. So what makes us rich is our financial IQ. Okay, give the same 100,000 to a person with a low financial IQ and a person with a high financial IQ, and we guarantee to see a vast difference in how that money is spent and grown. Central to the difference between those with low and high financial IQ is simple but profound literacy, the ability to understand a financial statement. That's why I'm giving you this financial statement right here that you can download and start working on. This is the homework that and the task that I'm asking you to take advantage of by the end of this video. I want you to download this. Just click on the link, go to our website at masterinvestor.education. You can see it right here, our secure website, and you can download this for free. This is our gift to you for watching this video, hitting the subscribe button, and becoming part of our community. Share this information when you find it valuable. Then it's really a treasure. When you don't share it, then it's not a treasure. Let's make our group of people around us financially smart so that we can build wealth together. Remember, investing is a team sport. It's not something that we should do alone, okay? So one of the most important things we need in order to be financially successful is to know how to read an income statement and balance sheet. But even more important is understanding the relationship between them. We can see that in the Master Investor's personal financial statement, which anyone can use and download right here. Okay, go ahead and click that link, and you need to have Excel, and you're going to have this. You can edit, you can add your numbers, and it's going to tell you what you need to work on in order to become financially free. And if you already are reach that level, then it's going to further tell you how to increase your bottom line in your asset column, which is what we focus on here, to acquire and build cash flow and assets that work in any type of economy that we have control over. So what the assignment is to work on reading your financial statement, work on it, fill it in, and then start educating yourself financially so that you can take control over your own assets, so you don't give your money away to somebody that is going to invest it for you. You're going to invest it. You're going to raise the capital. You're going to use your credit card. You're going to use your private loan that you have, your personal loan. You're going to raise capital from other private investors, because the job number one of an entrepreneur is to raise capital. So we need to understand that in order to start building true wealth, we need to learn how to read our financial statements. So here it is. We have felt that the relationship with the two was critical. How can we understand one without the other? How can we tell what an asset liability really is without the income column or the expense column? We may ask. For us, understanding the relationship between the two allowed us to easily see the direction of our cash flow, to easily determine if something was making us money or not. If something was making money, it was an asset. Remember, and we don't have to work to make that money, then that's truly an asset. If not, then it's a liability. Just because something is listed under the asset column does not make it an asset. The reason people suffer financially is that they purchase liabilities and list them under the asset column. It's not about what we make, the income, right? But it's how much we keep, because a lot of high-end employees, the people that charge a lot of money because they're doctors or the lawyers, they make a lot of money at the end of the year, right? But they have to pay taxes. The highest people that pay taxes are the employees, are the ones found on the left side of the cash flow quadrant or the cash flow circle that we talk about here at Master Investor, right? And the left side, we have the employees and the self-employees. These people pay the highest in taxes because the laws obligates them to pay the highest in taxes. On the right-hand side, we're going to find the big business owners and the inside investors. And what I mean about big business owners, someone that has a system of systems, someone that understands financial education, knows that we need to depart from the business in order to see it grow without us being present, because otherwise we'll be in the left side as a self-employed. A lot of lawyers have their own business, their own practice, but they have to show up to make that money, to see the clients. So we're going to show you how to have a system of systems that's doing the telling and selling for you. And so on the right-hand side, when we achieve that, then we are considered big business owners, right? We have a system of systems doing the telling and selling for us. So a true business is a system of systems. In an inside investor, we know how to make money work hard for us. So when we are getting cash flow from our system of systems, then we reinvest it into either a new asset that is producing cash flow, or we reinvest it back into the asset that is making us that cash flow to build another asset in that business financial statement or asset column, right? We're going to acquire another asset that's going to scale it even more. It's going to improve the bottom line. So very important to learn how to make money work hard and not necessarily you working hard for the money, okay? So we don't work hard for the money here. We work hard to acquire and build cash flowing assets, aka passive income, okay? Which is one of the types of income that exists. So money is just an idea. It's an idea backed up by confidence. And that happens after 1971 when President Nixon separated the gold from the dollar. From that point on, money became fiat, became debt. That's why when we use debt, and we should all use good debt, right, to invest into an asset that produces cash flow that we have control over. Debt is tax-free because money is created with debt after 1971. And so we should take advantage of debt and learn how to print money legally. Would you want to go to sleep and wake up and make money from thin air using debt, using other people's money, OPM, using other people's time, OPT? And so we got to master how to delegate, how to use systems, understand a little bit about several legalities, how to incorporate our own entity, how to hire our own lawyer to help us keep those legalities in order every year, how to file our annual report, how to minimize taxes through business expenses, including our personal expenses and those business expenses legally, and pay zero in taxes, because the number one highest expense that a person has in their lifetime is taxes. So if we can minimize that from the beginning by using an entity and using the laws in the tax code, then we can actually become more wealthy, because we're going to keep more money to ourselves, okay? So how money really works. As we have studied the idea of money through our life, we discovered the 90-10 rule. 90% of people earn 10% of the money in the world. And so 10% of people controls 90% of money in the world. So I want you to be part of the 10%, because we have financial education. We know how to build an asset. We know how to create passive income. We have time to our side. We control our time. We don't need to clock in and out. And we are building true wealth, okay? If we do not understand money or how it works, it will seem like a strange statement that the ultra wealthy position ourselves to have low income and high expenses, because earned income is the tax at the highest bracket. And in a way, when we are building passive income, in order to minimize our taxes, we need to create expenses. That's why we welcome expenses. We want to increase our expenses, not lower our expenses. We don't want to shrink. We want to increase. We want to expand. So kids, keep it super simple, right? In everything that we do, we got to make sure that's why here at Master Investors company, we keep things super simple, right? We kiss everything, right? And we make sure we use this concept to remind us that investing, yeah, is a complex subject, but it doesn't have to be difficult to understand. We got to be able to tell it to a 9-year-old, and the 9-year-old can understand what we're talking about. And if not, then it's not a good investment, or it's not a good business. So remember that. So cash flow patterns, as you can see, this is the balance sheet of a financial statement, right? An asset, liability, right? And the financial statement of a rich person will look like this. Assets put money into our income column, right? It comes from the asset column, right? And we try to increase expenses because our expenses, these are personal expenses. So we lower the taxes by increasing our business expenses when we have passive income. When you have a job, you will have zero assets oftentimes, and you just have a job, and the income comes here, it flows into the expense column, and it flows out the expense column. Oftentimes you have a lot of liabilities, right? It depends on the person's money habits and the way they spend their money. They have a house, they have a car, they have to pay it every month, so it flows out of their financial statement and never comes back again. Their money never returns back. So when we start to understand what is happening in this diagram, you will begin to see a world of greater and greater financial abundance. Essentially, what this diagram shows is that the wealthy use any income to purchase assets that then create more passive income for us in the form of cash flow. The reason for this is that the income this assets create is not earned income, but rather passive income, the lowest tax income. Additionally, these assets can be kept in entities that provide substantial tax benefits. In short, though we may be very wealthy, we do not have high income like a high-paid employee will. One of the most important controls we can have is found in this question: what percentage of the money going out our expense column wins up back in our income column in the same month? By understanding the side of the coin that we are speaking from, we can see a completely different world that most people who work hard, earn a lot of money, and keep their expenses down never see. We could see a world of ever increasing wealth rather than one of diminishing returns. The financial statement of a middle class person compared to the rich one is right here. You have a job. It comes right here as an income, as an earned income, because they exchange time for money, and then it goes out to the liability column because they have a car, they have a mortgage that they live, they have credit cards that they're using to buy liabilities, and now they have payments, expenses goes out. The money flows out of the expense column and never comes back. This is the financial diagram of most of the world's population. In other words, the money comes in through the income column and it goes out the expense column and never comes back. That is why so many people try to create a budget to live below their means, and we encourage you to live above your means, right? People that live below their means, they save money, be frugal, and cut back on expenses. That is shrinking. We want you to expand. This is why most people will say my house is an asset, even though the money goes out the expense column and does not return, at least not immediately. It also explains why people say I'm losing money each month, but the government gives me a tax break to lose money, rather than saying I'm making a lot of money on my investments in my asset column, right? And the government gives me a tax break to make money. And that is true. We can either blame the government or we can become partnered with the government because we understand corporate law and we're using the tax code to improve the economy in the country or in the world. And therefore, we have tax breaks and we have benefits because the tax code is a package of incentives for entrepreneurs and inside investors. Why our house is a liability? To illustrate that your house is a liability, this diagram shows it right here, because if your house is being paid by your own time, by your own money, because you earn the money by exchanging your time to go get that money, then is a liability, right? Because the mortgage is right here on the liability. Even if your house is listed as an asset, is a liability because you're paying for it. It's a big mortgage, and the word mortgage comes from the French word mortir, which it means unto death. Usually people never get to pay their house off. Our house is the bank's asset, right? Well, the banks controls the house and they receive that mortgage every time, right? So the line that read rental income and net rental income, the key word being net, that additional to financial statement changed the house from a liability to an asset. So a person whose house is a liability today, you can turn it into an asset very quickly by maybe renting half of the house through Airbnb. And as long as those tenants, the renters are renting the space, every month exceeds the total amount of the mortgage payment plus the maintenance, etc., and it leaves money into your pocket, then now is the bank's asset and it's also your asset. So we can turn a liability into an asset with financial education. That's why increasing our financial IQ is very key, because we can actually turn liabilities into assets and create a win-win and partner up with the bank, right? So very simple. We explain if the rental income of the house minus the expenses of the house equal positive net rental income, the house is an asset. If not, it's a liability. Our personal financial statements simplify, right? These simple lessons are profound, and they are the basis of building all great wealth. Going back to our earlier comment, a person with a high financial IQ and 100,000 will be able to know how to invest it in assets that are true assets, one that puts more money back in the pocket each month. The person with the low financial IQ will spend the same money on liabilities but wouldn't be able to diagnose what was wrong. Instead, they will try and work hard to make more money, a vicious cycle we call the rat race. Understanding the relationship between the income statement and the balance sheet, as seen with our personal financial statement template, allows you to quickly understand if an investment is an asset or liability. And this understanding would allow all of us to make the right investment every time. Today, ask yourself the same question. What percentage of our wealth goes from our expense column back to our income column in the same month? If we can understand how this is done, we too will find a world of ever-increasing wealth. If we can see this, find someone we trust and discuss how it might be possible. We can start by talking about a post we wrote earlier this year, 4 tips on budgeting to becoming rich, right? You can find the link in our blog when you visit our website. When ready to start building and increasing our cash flow, then find our ebook and read it. It's a total guide that will guide you step by step and get benefits from being a paid partner of Master Investors Company. To get started with some guidance, download our copy of How to Build Cash Flow with the Internet. This is a ebook that is going to change your life completely. It's going to help you understand financial literacy. It's going to increase your financial IQ. It has over 500 pages of valuable content and proven formulas, and it's going to give you a detailed guide in how to start building cash flow with the internet, okay? You can find it right here. You can also go, you can click on the link here, and you can either type your name there, or you can go to all courses, right? Find some resources by the end of the blog. Make sure you hit a comment, you like the blog. Create some content here, some questions if you like. Also, if you have a question, you can drop it right here on the chat below this video here in YouTube. But if you're reading it on our main page, go ahead and comment in here, because somebody might have the same question. We're going to answer everybody's question, okay? So all courses, you're going to come to the first one right here. How to Build Cash Flow with the Internet. Buy a digital copy of our new book, A Total Guide to Learning How to Build Cash Flow from the Internet, filled with financial education made simple. Learn the new rules of money and invest with them to get wealthy fast. The book has over 500 pages. And any update version that we do, you're going to have access for lifetime, okay? And you become a paid partner, and you have a lot of benefits when you do, okay? And you can also find the 10 new rules of money by going to MASTERINVESTOR.money, okay? You just go here and you enter MASTERINVESTOR.money, and it's going to take you, actually it's going to take you right here. So I'm going to leave this link right below. And we will send you a copy of that as well, okay? So visit our main website. There you have it. And I hope that this live broadcast has been valuable to you. Visit our main blog. Make sure you subscribe to our newsletter. Subscribe to the channel. Give us a like. And remember, money is knowledge. It does not take money to make money. It takes knowledge. It takes financial education. It takes us being able to read a financial statement, starting with our own. And make sure you download the financial statement that we provided to you here, which is so valuable, okay? And make sure you fill it in and leave a comment below, bringing you the good and bad news of money, the business principles that work in all economies. Once again, giving you financial education made simple. Our mission here at Master Investor is to elevate the financial well-being of all partners. Thank you for watching, and I will see you on the next live broadcast. Bye for now.